Hi and welcome to Swissquote's Daily Market Talk. It's Wednesday, February 26th. The US stocks continue to remain under the pressure of Trump uncertainties and unideal economic data, while the European indices resist to the sell-off across the Atlantic Ocean, with investors building stronger positions in the old continent's defense sector. Now, today in the US, Nvidia is due to announce its latest quarterly earnings after the markets close and has the difficult task to convince investors around the world that the rally in the US technology stocks is not over. So hi again everyone. I hope the sound is better today because we will talk Nvidia that's due to announce its quarterly earnings today after the market close in the US, and that will either reverse the morose sentiment of late or emphasize it. So yesterday was yet another ugly trading session for the US equities. The increasingly heavier weight of Trump talk, deteriorating relationships between the US and pretty much every other nation across the globe, except maybe Russia, but the others are just not doing well with the US these days, combined with higher inflation expectations in the US on tariffs, the uptick in inflation, and weakening expectations from the US consumers are certainly to blame for the sell-off that we see in equities these days, that, by the way, boost appetite of investors in bonds that are considered to be safer investment options. Remember, now last Friday, the data had shown that the US 5 to 10-year inflation expectations had spiked to 3.5%, which was the highest level since 1995. Then another set of economic data yesterday from Conference Board this time actually approved these concerns about rising inflation expectations in the US and also warned that consumer confidence in the US declined for the third straight reading, and the drop actually concerned all age and income groups. Also note that small businesses in the US that have grown more optimistic about Donald Trump's America First policies, remember, right after the election, are now losing that optimism and have also been severely cutting their capex plans. Because costs with the tariff rises on the table don't cope well with profitability. As such, while the small caps in the US are now extending losses below their 200-day moving average, the mid caps pretty much the same picture. The S&P 500, on the other hand, extended its own losses yesterday and tipped a toe below its own 100-day moving average, while the technology-heavy Nasdaq 100 index retreated more than 1% yesterday, also testing levels below its own 100-day moving average. Only the Dow Jones Industrial Index eked out some gains yesterday, thanks to gains that we saw in consumer staples and healthcare sectors, which are considered to be defensive industries, but the rest looked quite bad. In the sense, Round Hill's Magnificent 7 ETF, for example, dived more than 2% yesterday. Then Tesla tumbled more than 8%, guys, on news that sales in Europe nosedived 45% in January. I mean, the company sold less than 10,000 cars last month across Europe. How bad is that? And it's not competition. It is not general appetite for electric vehicles, because the sales of EVs in Europe actually rose during the same period than Tesla's 45% plunge, and it's believed to be mostly due to rising frustration about Elon Musk and his political interventions in European countries' domestic affairs, and especially his support for far-right leaders. As suspected, far-right voters are not necessarily the biggest Tesla fans, and surveys in the United Kingdom and in France actually hinted that the political involvement of the techno king may have something to do with these plunging European sales of Tesla cars. Elsewhere, Nvidia lost 2.80% yesterday and tested its 200-day moving average to the downside just one day before announcing its quarterly result. So all eyes are on Nvidia today, that is expected to reveal its fourth quarter earnings after the closing bell, and expectations are strong, of course. The company is expected to have increased its quarterly sales to 38 billion US dollars last quarter on the back of the launch of Blackwell chips, the new generation chips, and sustained spending from the big technology companies. Note that TSM results were also strong during the same quarter, and that's a positive walking into Nvidia earnings. The company's forecast, on the other hand, is also expected to be strong on the back of the Stargate project from the Trump administration and further spending pledges from the big technology companies of the US. And these big technology companies that include names like Meta, Microsoft, Apple, and Amazon are nothing to be minimized, mind you, as they actually made up to 50%. Yes, 50% of Nvidia's revenue in the third quarter of last year. And the fact that they are looking for premium chips for game-changing innovations could actually turn to be an advantage for Nvidia in the very short run, though we all know that the risk of high concentration of these big technology companies in Nvidia's client book should be addressed at some point in time in the medium to long run, given that these big technology companies are also up all night to launch their own chips. And besides that, well, investors will also closely monitor other risks for Nvidia, including supply chain and capacity issues, for example, profit margins under pressure, rising competition across the world, developments in China, for example, with DeepSeek claiming to have built its AI model on cheaper versions of Nvidia chips, but also the competition, because the Morningstar warns that Nvidia chips, for example, dominate only 40% of GPUs used for inference training. So inference trading is the process of drawing conclusions based on evidence and reasoning rather than direct statements or observations. And they actually say that for inference, well, there could be increased competition for chips. All in all, well, investors are now very much used to see impressive or overly impressive results from Nvidia. Therefore, the risk factors could reverse any optimism from strong results. Add to that the fact that the market environment of late is not necessarily ideal. Well, Nvidia has the heavy task of lifting the market mood, investment sentiment this week. If it cannot do so, well, the sell-off in stocks could actually accelerate despite the falling yields in the US. Note that the technology sell-off is also impacting mood in the cryptocurrency space, in the sense Bitcoin plunged below the $86,000 level at yesterday's trading session, another weakening leg of the early Trump optimism. In the FX, while the US dollar remained under the pressure of trade and Trump and the geopolitical worries and also the bad economic data from the US, the euro dollar made another attempt on the 105 offers, but is still below this level this morning, while sterling bulls continue to fight the bears against the US dollar near the 100-day moving average. But hey, the mood in European stock markets is somehow different than the one that we see in the US these days. Note that the Stoxx 600 was slightly positive at yesterday's trading session near a record high level. The defense stocks remained well bid. And to answer a question that we had yesterday from our audience, well, the British BAE Systems, the German Rheinmetall, and the Italian Leonardo, and also the French Thales. So those are the companies that are the major defense stocks of the old continent right now. And if you look at their market prices, they are all adding to their gains these days. In terms of technology in Europe, well, unfortunately for the Europeans, and that's a big problem in my opinion, well, Europe doesn't have the kind of technology giants compared to the US, like Meta and Amazon, or compared to China with Tencent and Alibaba, for example. But there's some decent names like Siemens, for example, SAP, Infineon in Germany. We have the chip equipment maker ASML in Netherlands, which is a unique company of its sort across the globe. The SoftBank-owned own ARM holdings in the UK, and these companies help the European indices keep up the pace with the US technology rally over the past 2 years, and they actually may see further inflows now that the Europeans have no choice given to them but to invest in their own technologies to, well, support their military technologies as well. So voila, I remain very optimistic in the European defense and technology stocks, and I hope this helps. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below, as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.